Hello, boys and girls. Welcome to another live stream where we get to trade live, right? This is no gimmick. This is no talking. This is real trading. All right. My name is Arnold. I'm your trading coach. It's my mission to provide trading insight and so you can develop trading skills that can be good for the long haul. And if you find value in what we're doing, please like and subscribe. So today we are trading live USDJPY, the Tokyo session. This is a good time for some of you who have a job and you want to get into trading. This is definitely a good time. All right, let's get to the chart. Let's see what the market is telling us. Quite an interesting market. It's a lot of noise. You see, there is no clear sense of direction. The market opened bearish and it just kept dancing back and forth. Nobody is in totally control. So we can clearly see if the bears, the sellers, or the buyers are in control. Everything is in the waters at the moment. What is happening? Why is the market in this kind of confused state? Does that mean there is no clear sense of direction, or the market is trying to does that mean there is no liquidity in the market? There are not as many buyers and sellers, and just causing price to kind of be a lot more sporadic, so to speak. What is going on? At the moment, we just gotta wait for price to come to our levels. We just gotta wait. You know, the way we trade, we don't typically trade price action. We identify predisposed liquidity zones, and based on our year of experience, we're able to identify those zones. And when price comes around those areas, we expect to see a certain reaction, and that is when we execute our trade. So looking at the market right now, there is no opportunity for us to get into the trade. Everything seems to be in the ocean. We like when market goes to kind of like the periphery, right? Those are pre-established levels where there is a greatest chance that the market will grab liquidity at those levels, and then it's going to go for a correction. And what we do simply is to wait for the market to come to those levels, then we execute our trade. At the moment, what is going on? Everything seems to be a sell. It seems like sellers are gaining momentum, and there is a strong bias towards sell, and that is clearly seen on the chart. We see right here the market formed this range, traded within this range, and now it break past this level. This seems to be like a new resistance, and price seems to be resting around that level, and it went there to kind of grab liquidity, and it did, and it bounced back. So let's see what happened. And now everything looks as if it's a downtrend, and added to the fact that GBP JPY is also very, very bearish, and it's part of our observation that in order to be able to see the direction of the pair you are trading, you can glean some ideas in terms of what direction the market is anticipating to go, right? By looking on how the correlated pairs are trading. So our correlated pairs, that are correlated with USDJPY, we have GBP JPY, Euro JPY, Australian JPY. And when we look at all those pairs, there is a strong sell in all those pairs. And among all those pairs as well, there is a leader or there is a logger. So the leader set the dance, the tune for the tune of the dance. The leader leads the dance. And the leader is GBP/JPY. And GBP/JPY is down by 100 points. So that is a second layer to our analysis to make us to feel like, okay, it seems like there is a strong bias of price going down. All right. But what do we do with that information? Pretty much we do nothing, but it just helps us to understand, anticipate where price is more likely to go. We are not trained traders. We don't try to predict. We are not in a game of predicting. We just react. So we see all that, we plot our levers and we expect price to come to our levers. When price comes to our levers, that is when we go for a trade. So apparently it seems like the market respected this area, which was a support area towards the New York trading session. That seems like towards the last hours of the New York trading session, this area was a support. The market came there, respected that. And for some of you who don't know, the market always respect previous areas of support and resistance. And they say support and resistance, but technically what is happening is that the market makers, they need to know how retail traders trade, right? They are aware it is common practice within the retail circles that entries are failed during support and resistance, right? So what they do, they come around those areas and respect those areas to kind of grab liquidity, because the market primarily goes where there is liquidity. As we can see, the market came to these levels, it came there, it bounced back. So apparently it filled orders for people that were anticipating for a sell, for a buy at that level, and it filled that order, grabbed that liquidity, and is going up. Okay, is that a real move or is that an inducement? That move right now, this move right now could mean two things. The market grabbed this liquidity right here. It might go up, or it will possibly come back and break this level to actually hunt the stop loss. So this could be a trap where it is trying to trap a lot more bullish traders thinking, oh yeah, the market is going up, right? But it eventually reverses and comes back and hunt that stop loss before actually going back off if the intended destination or direction was to go up. That is what we're analyzing. And if you ask me to really analyze, I think the market is going to come down. I think what is happening right now is more like an inducement. They are trying to get in a lot of buy orders, right? They're trying to fill a lot of buy orders, but it's going to come back down to get their stop losses before eventually distributing. That is what I think. I might be wrong, but I just think that's what likely to happen. Added to the fact that we have a strong resistant area right there. That's a range. This range right here. This is strong. That is a strong resistant area. Yeah, I might be wrong, but I think that move is not gonna go up. I think it's probably gonna come back and take all the hunt all the stop losses, then eventually going up. But I still could be wrong, but that's just what I think. I'm not too convinced about this move, and I gave my reasons, right? So let's see. Everything looks like it's going for an uptrend, but I don't trust it because it just came at this level, just filling this order, right? And it's just going up. That is too clean of a setup. It's too clean. It's too clean. I won't buy it. I won't buy it. Let's see. Let's see what happens. Do we have like a fair value gap here at the bottom? Yeah, we have a couple of gaps. We have a couple of gaps. Couple of gaps. Couple of gaps. Yeah. I might be wrong, but guess what? It's okay for me to be wrong. It's okay to be wrong. Okay? Perfectly fine. It's perfectly fine to be wrong in this market. We are trying to make sense of everything that is happening, and we are fully aware that we're gonna be wrong for the most part, right? And but it's okay to be wrong. This is not a place to gratify your ego, right? So if you're looking for somewhere that's going to gratify your ego to make you feel like you're right, you're the smartest guy, I guarantee you it's not in this market. If ego gratification is what you want, the market is going to make sure you get punched to the face, because you're going to be wrong more often than you're right in this market. I can guarantee you that. It's just the way it is. So we just got to know the game we are playing. The game we are playing is not a game of certainty. We are playing a game of uncertainty, and we work with probabilities and risk reward. So that is how we play it. Yep. I was saying I wasn't too convinced that price is going to ignore these areas and just go up. So I'm still thinking this price is still going to come down. That was an inducement, but that was too long of a candle. No, no, I don't think it's gonna come. I don't think it's gonna come down. Yeah, the 6 pips. Interesting, interesting. How long is gonna last? Let's see. Let's see. That was a deep retracement. That was a deep retracement. Let's see. Let's see what we get. Why did that slow down? It might not be a bad idea to getting here. And stop loss just right. Right above that open and target. That would definitely not be a bad trade. Yeah, boys, what do you guys think? What do you think about what is happening? We think it's gonna go down or it's gonna go up? Yeah, this is like we just got in, but it's just like a softball. Just like let's just get a feel. Let's just get a feel of the market. Nothing too cumbersome, nothing too serious. Let's just get a feel. Let's get a feel. Let's see what is likely to happen. Let's see. All right. That looks interesting. Yeah, we in. Is this gonna be a winner? Look at that candle. How? Come on, boys. Come on, go down. What are you waiting? Give me some money. I don't like that. I don't like that retracement. No. I don't like that. That is a long week and a long retracement. So when that happened, nah. Two things, right? Is either the market is really rejecting or that is an indication that the market really want to go down. And there is that battle, right? There is that battle between the sellers and the buyers to gain that position. But that long week could be an indication that price is literally trying to go down. No. And at the same time, there's a strong resistance area there that is resisting the price from breaking past that level. But if I'm sticking to my conviction, I think it's still gonna go down. Everything it looks like is gonna be a downtrend. I think so. Even if he has to go back up, we'll come back down some more before eventually going up. Let's see. Let's see. Let's see what happens. Yep. Give me the money. Keep going. Just go right now. No brakes, all gas. Just keep going. Let's make some money, guys. What do you guys think? Are you guys in this trade? Do you guys think it's going down? What are your analysis? Let me know what you guys are thinking, chat. Let's make some money together, chat. We ain't gonna be left behind this time. We gotta make some money. Everybody gotta eat today. Hope you guys are in this trade right now. I'm sitting on my hands and just waiting. We are not over trading. We are comfortable to accept the losses for what it is. We are systematic. At the same time, we're discretionary. Yep. In this situation, this was not our typical entry, right? But it was just one of those discretionary trade where we like, good risk reward. Not a bad idea to do some kind of softball and to have a feel of the market, right? Sometimes you just want to have a feel, put a little position in there and just have a feel of what is going on. And that's exactly what we did with this position. Let's see what happens. Let's see how it plays out. Is it gonna be a win or is it gonna be a loss? Let's see. Yeah, that area is strong. It seems to be a strong area of support. Yep. Oh no. Let's see. We are waiting. We are in drawdown, but no panic, boys. No panic, boys and girls. No panic. We wait. We just gotta wait. Let's see what happens. We're pulling the trigger. There's nothing we can do. We are not gonna panic. We are not gonna close it. We gotta let it play out. If it takes our stop losses, that's it. That's trading. It was a good shot. We had a good risk reward. Why not? Why not, guys? It's a game of risk reward and probability, right? When you have a good risk reward and you can take a chance, and taking that chance, two things could happen, right? You could win or you could lose, and you have to be willing to accept each of the outcome. But now you have a good risk reward. So if we are losing, we're losing less. If we are winning, we're winning big. That is trading. Understanding probability and risk reward, and the two goes hand in hand. So sometimes there are some trade that there'll be the probability for it to happen will be lesser, and most often those trades have a greater risk reward, right? Like say for example, right, when the market came here at this level, right? At this level, right? Some people could have gotten into this trade right here at this uptrend, at that buy candle. Some people would have gotten there. In that situation, they will have a better entry and their risk reward will be greater, right? But guess what? The probability is lesser, right? However, we entered here. It gave us some signal of retracement and we got in there. We had a higher probability, but our risk reward is not going to be the same as this guy who got in there. It's that exchange between risk reward, probability, the chances. You can have both. There are few occasions where you have a good probability and a high risk reward, but sometimes you have to exchange those. And then now you got to be ready for the outcome to happen. And that is trading being made simple. Risk reward probability, nothing more, nothing less. We capitalize on that and let everything play out. Let's see what happens. Seems like it's gonna give us some money, guys. It looks like it. At this point, everything is on the table. We can't go risk-free yet. We gotta still wait. But it looks a little bit... Nothing is clear yet. Anything could happen. Anything could happen in this market. Anything could happen. If we break past this level, then we're gonna go risk-free. If we break past that, boom, we gonna go risk-free. Okay, that's good. If not even risk-free, but we're gonna 147, 643, 147, 643, 147, 643. All right, trade management. So as we break that level, we manage our position, right? We'll bring down our stop loss. If it goes back and take us out, that's what it is. It's what it is. It's what it is. It's what it is. It didn't break that level completely. It did not break that level completely. But yeah, at this point, we are still risking something, but not as much. That's just what we do. It's broken that support. If we go past that support, it means our idea is invalidated. And boy and guys, that's something you all have to understand as well, right? Don't be too married to your idea when you're in the market. It's okay to anticipate that something is going to go in a certain direction based on your analysis. However, you have also to be kind of flexible to see what is happening in real time, right? When things are happening in real time and price is unfolding, you can literally shift your positions. When the market gives you something different, sometimes it's okay to not to be hung on to your idea, but to change as the market is giving you new data. All right. In this case, it seems like it's still gonna be a downtrend, but since price has not gone past that support and is going back up, it seems like the direction has changed. However, we have reduced our stop loss. If it goes back and take us out, we should be fine with that. Right now, anything can happen. Anything can happen. It could go up, it could go down. But we took a shot. We took a shot. We had a good risk reward. And if it goes on and take us out, we're losing something. But that's it. That's it. Interesting. There's a W formation. That W formation seems like maybe price will go down to the neckline. And yes, a quick lesson, guys. And I know people say a lot of things about patterns and all those things, right? The way I look at the market is like, yeah, we learn all this new concept and all these ideas, but guess what? There are some fundamental things in the market that still work. And the idea is the W formation. You look as a candle form the W, see what happens. Whenever that is formed, be it at a higher time frame or lower price will always try to come to respect this neckline. And sometimes it could indicate that price might go down. This thing has some kind of a pull. I don't know why, but I think it has to do with human psychology or something. It has to do with that. But it's always going to happen when like double bottom, price always come back to this neckline, and or it could break past a line. So let's see. Let's see. Let's see. Let's see. I like that. Look at that gap. There's a little gap that was created. Maybe possibly you probably didn't see it. A little gap was created. That gaps, it tells us that there is a strong selling pressure, right? The sellers are in control and they're trying to take this thing down. That's why this gap was created right here. That gap was created. Some people will call that fair value gap, but that is showing an aggressive sellers. The sellers are literally fighting to be in control. Let's see. Let's see. Are they gonna be? Are they gonna take this thing to the moon? Let's see. But the gap was created. That's an imbalance. Aggressive sellers are trying to drive this thing down. Let's go. Look at that. Look at that. Look at that. It's just unfolding. I'm not a magician. I'm just calling it out, right? Nah, I'm joking, guys. No magician. Nah, it's just one of those things, okay? We get it right sometimes, but more often we get it wrong. But the thing is, we are comfortable to be wrong, and we know we're gonna be wrong most of the time that we are right. And we are comfortable sitting in that. And in this situation, guys, I think it's not a bad idea for us to bring our stop loss a little bit down. 147,628, 147,628. All right. At this point, we are break even on this trade. We are break even. If we want to be a little bit smart, we can get into another trade. Our first entry is risk free. We can get to second trade at a pullback, right? Since our first trade is risk free, that's how we maximize. Let's see how it plays out. First trade is risk free. First trade is risk free. Our second trade isn't right. Let's see. Let's see what we get from this market. Yep. First order risk free. Second order. Let's see what happened. If it goes back and take us out, we'll lose a portion, but if it goes down, we'll increase our win rate. Trade management, right? That is trade management. Let's see. Whenever our first trade comes to the break even, we get into our second trade. Let's see how it plays out. And we are okay to accept whatever outcome. But I think that was the right move. If it goes back up, so be it. What do you guys think? What do you guys think, guys? You think it's gonna go down or it's gonna go up? I'm a little concerned. I'm a little concerned about this going down. I'm a little concerned. I don't like the way JPY is acting. I don't like the way they are acting. They are retracing massively. JPY is making me a little bit too concerned in terms of the direction of this price. Yeah, I'm concerned. I am not confident. A little concerned, guys. Yeah, a little, but we can do anything. We'll let it go. If it goes against us, that's fine. We are just losing something little. Our first trade is risk free. The second trade is a little bit. Okay. A lot of indecision happening right now, but I'm not too confident. I am not too confident, guys. I am not too confident. Let's see. Oh no. I don't like that. Okay, that's good. That's a retracement. That's good. That is good. I like that. Give me the money. I'm tired. Can't keep waiting. Just go right now. Go. Well. Guys, this is trading live, no gimmicks, live, real money on the line. All right, live. We are trading live, real money on the line. Look at that. Taste of patience, but guess what? We are okay. We are fine. We're not panicking. First trade is break even. Our second trade, it's a little bit. So if we're losing, we are okay. So it's an acceptable loss. We'll take it. But if we win, we just gotta win a little bit more. That's it. Just a little bit more. Just a little bit more. Are we gonna be fine? I like that. Look at that. Come on, boys. Whenever I saw this rejection candle right there, that made me happy. I was like, boys and girls, it seems like we are up to something today. Seems like we're gonna make some money today. All right. This is no gimmick. Live trading. We are calling it live. Live. I remember this is not our A plus setup. This is just us, testing the waters and see what will likely happen. Okay. Oh no, price is still dingling around this area. Dingling. Ah. Yeah, I don't like this. I don't like what is happening. GBP JPY is not, it's not giving me that strong confirmation in terms of where the market is going. Right now, it is trading at 660 points, whereas USDJPY is trading at 40 points. I don't like it. I like when there is a gap. If like GBP JPY was trading at like 100 points and USDJPY was trading at 40 points, that is a huge gap. That gives us a margin to be like, you know what? Maybe price is just gonna go down. But now with what is giving me, anything is likely to happen. Anything is likely to happen. So I'm not too comfortable. Once GBP JPY gives me that gap, right now they went to 70 point, a little bit okay, and USDJPY is still trading at 40 points. That is okay, but it's not exactly what we want, right? We want a gap. We want a gap between USDJPY and GBP JPY. We want that gap. GBP JPY is the leader. When they have that gap, it means they have a dominant influence in terms of where price is gonna go. But in the absence of that gap, it's like the market, anybody can be in control and it can go anywhere. And that's what we are seeing. I don't like it. I said it, I don't like it. Yeah, this could be a loss. It could be a loss. And I'm okay. It could be a loss, just a little loss. We're not losing a lot. Remember, our first position was break even, right? We got in for our second position, just to maximize the trend. And if it comes back, well, we take it. We take it. What are you guys thinking, chat? Your thing is gonna go down, it's gonna go up. Let me know. Let me know what you guys are thinking. Let me know your thought. What do you guys think, guys? We are still in this. Yeah, nothing is clear yet. Nothing is clear yet, but we are hanging in there. Ah, not an easy, not an easy trade, regardless of what is happening. But we are still here. We are not going nowhere. We are good. All right. I like some what is happening a little bit. GBP JPY is now 80 points down, and USDJPY is still at 40 points. Like that's like a 30 points gap. I like that. I like that. It's giving me a little bit confidence. It's making me feel like drinking some coffee. I like it. What do you guys think? Let me know what you guys think in the chat, guys. Look at what is happening. All right, boys and girls. I want you to pay attention with what is happening when the market is to go down. It's just gonna go. It's just gonna go. But he has to take his time, fake out people that is one trying to fake. But I like everything we are seeing now. I like everything we are seeing now. Everything looks good. Did the market just flip on us while we're just all excited? Oh, guys, this market. Our excitement was up, and just all of a sudden, everything just went against us. Look at that. Look at that. Isn't that crazy? From being excited that we're gonna go, it came back. That range, this range has been created. So, oh, guys. Oh, complicated, complicated, complicated. Anything can happen. Anything can happen. Anything can happen. So let me ask you guys a question, right? So you what do you guys think, right? I don't know if you guys have heard of this saying. I don't know who said it. Don't quote me for it. Somebody once said a statement that if you give me a level and I'll be able to change the world. And I'm wondering, what is a level in trading? What is a one thing in trading that can literally make a whole lot of difference in your trading? What is that one thing or two? I want to know your thought, guys. What do you guys think is a one thing in trading that is super important than every other thing? We have a couple of things in trading. We have risk management, we have psychology, we have trading strategies, we have indicators, we have all those things and all those things. So what is the one thing that you feel like if you have a better grip of those things, every other thing is gonna fall in place? What is that one thing? I know a lot of people will say strategy. If I have a good strategy, that is why we go chasing for strategies and all that good stuff, right? Because we are looking for that holy grail strategy. But what if I tell you there is nothing as a holy grail strategy? But the truth is, your holy grail is already in your hand. And it is all about how much you risk and whether you got the God to follow it through. That's it. Nothing more than that. How much you risk and whether you have the God to follow your damn rules. You don't need 100 setup. You need 2 levels to make a great difference in your trading. Just 2 levels. If you can master these 2 levels, risk, discipline, those 2 would make your trading go exponentially. So rather than chasing the holy grail, focus on mastering risk management and discipline and psychology. Once you master those 2, every other thing is going to fall into place. That's it. Focus on that. If there's something you can get from this stream, you got to focus on risk management and discipline. That's it. Once you focus on that, just a basic support and resistance can make you money. Just a basic that. If you can manage those 2, you're going to be all right. Okay? That's all you need. Don't chase all this guru with all these lofty ideas and all this lofty concept. It's not going to work. Risk management and discipline is what you need. Back to the chart. Look at what is going on, guys. A lot of things. No clear sense of direction. Anything can happen in this market. Anything can happen. This is a range. It seems like this is like the accepted price which the market makers are willing to trade in. And what I'm thinking, eventually price is going to break out of this range, and when it breaks out of this range, it's either going to be upward or downward, but that I don't think that will be the right direction, but it's going to eventually go to its right direction. I think right now we're in an accumulation phase, and we are seeing price respecting these levels in and out, back and forth. No clear sense of direction. When it goes down and we start feeling it's going down, boom, it goes back up. So we are not doing anything. We are not going to be in a hurry to close out our position. We're going to let it play out. If it take us out, so be it. If it give us money, so be it. But we're not going to do anything. We got some few pips, some few dollars on the line, and we are comfortable to handle that. What are you all doing, guys? Did you guys panic? Did you guys close out of your position? Or are you guys going through this emotional turbulence with me? When you feel like, oh, it's going down, it comes back up. So putting us in this kind of little roller coaster. But guess what? We are okay. We are okay. We're not panicking. We are comfortable either way. We are comfortable to accept our loss. And we are comfortable to take our win. So we are waiting. Look at that, guys. A lot of things is going on. A lot of things is going on. A lot of things going on in this market. A lot of things going on, guys. In situations like this, guess what? We are sitting on our hands. We are sitting on our hands, right? We are not doing anything. But if you cannot sit on your hands, guess what you're going to be doing? You're going to be trying to use every indicator. That's why everybody's out here chasing all kinds of indicators and like they're looking like for a buried treasure. But let me give it straight to you. The two biggest levels in trading is risk management and discipline, which is actually in your hands, and your ability to sit and literally sit and wait for the market to come to you. Just sit on your damn hands. Sit on your damn hands is all you gotta do. Like right now, we've been sitting on our damn hands for the past 40 minutes or so. But we're sitting, we're not doing anything impulsive. We're not hurrying, closing our trade. We're letting it play out. And we are comfortable with the outcome. We've already accepted the outcome. Be it a losing trade or a winning trade, the outcome has been accepted. It is what it is. Because we understand we gotta stick to our damn rules. Forget strategies. The market won't be able to shake you if you master risk management and discipline. Remember our three rules: discipline, precision, patience. 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 That is our damn rule. All right. The market took us out of our first trade, break even, letting our second trade to play out. Let's see. We are out. We are out. The market took us out of our two positions. It's okay, guys. It's okay. We ain't got moan about it, right? That's trading. It's okay. We are all good. It's what it is. That's what it is. What could we have done better? Nothing really. Nothing really. I think we traded well. Our first entry came breakdown. We went break even on our first entry. Then we went for the second entry to kind of maximize that profit. But the market traded a little bit in the range and came back and took us out. I think we executed perfectly. We executed perfectly. Yep. That's what I think. I think we did that. The way it took us out, we want to go down. Did it take us as a liquidity? No, yeah, possibly. But guess what? I think we did overall. We did great. We're not gonna chase it. We're not gonna fight it. We're gonna let it play. We gotta wait for our next setup. We gotta wait for our next setup. Let's see. Let's see how far price is willing to go. Yep. We took a little loss. Just a little, just a little, just a little. So let's wait for our next entry. Hope the entry is not gonna come a minute, because we gotta give ourselves some break, right? Before getting into the next position. As a matter of fact, we gotta do some stretching, because that's a rule, right? We gotta stick to rules. Once we experience a loss, we gotta distract our mind, because we understand that when a loss happens, even though if we accept the loss, it triggers our emotions. So we have to upset our pattern with a little exercise or something. So that's what we're gonna do for now. We're gonna take a little exercise. All right, guys. All right, guys. It seems like the market used us as liquidity. Okay. What can we do? Is how it happens. It's just trading. Should we chase it now? No, we're not gonna chase it. We're gonna let it go. Wait for the second entry. At this level, we're not gonna chase it. We're not gonna do impulsive. We gotta wait for it. Yep, crazy market. Imagine if we had chased that move and now we just put on in a whole roller coaster. We're not going to chase this. We're not going to chase it. Let it go. Let it go. Let it be. Let it be. Let it be. Just let it be, okay? Whenever you find yourself, you're trying to chase a trade, let this song come to your mind. Let it be. Let it be. Whatever that is, I know you probably, this is the best singer you've ever come across. Let it be. Let it be. We are here, boys and girls. We are stuck in a range. What do we do? What do you do when you're in a range? That looks beautiful. That looks beautiful. But guess what? It's okay. It's okay. We're not gonna mourn about it. We're not gonna cry about it. That was a beautiful candle. In a normal session, that could be like a breakout, but you can tell this crazy price action today. It could literally go back up. It could literally go back. But in the normal scenario, that could be like a breakout. And the fact that JPY is down 90 points. Okay. Yeah. Looks like that's a breakout. It looks like, yeah, it looks like that's it. Looks like that's it. Yep. That's what we're anticipating, but the market was like, not today, not today. We're not going to give you that, not today. They used us as liquidity. They came and took us as a liquidity grab, and now they are going to our intended direction. I feel like crying. Why did they do that to us? Aren't we too cute? Why did that happen to us? Why did that happen to me? Why? Why? That's how some of you be crying when the market goes against you. Why did that happen to me? Guess what? It happens. Sometimes we are being used as a liquidity. Sometimes other people are being used as it. And it's not us, but today it just happens to be us being used as a liquidity. And what do we do about it? Should we cry? Should we stop trading? No, it's always going to happen. Some days you're going to be used as a liquidity grab. Some days you're not going to be used as that. That is trading. That is trading. Yep. Not a cleanness of price. You can see this is not, it's a challenging market to trade in. Look at everything is dirty. There is no clear sense of direction. There is in and out, but this seems like it's gonna go. Yeah, this is gonna go. It's gonna go. At the very least, it's gonna come back. Maybe grab this liquidity, go further down, or it's gonna go to our original, take profit. Let's go. Look at that. Yeah, this looks good, guys. It looks good. JPY is up 120 points, and it's like the gap is wide. And USDJPY is 70 points, so there's almost 50-point gap. That is good. When we see that, that is good. That is good. This is a strong sell at the moment. Strong, really strong. If it goes up from here, it means it's just like a crazy market. But from here, high probability it could go down. But this market, you can never tell. It could still go back up. However, we are still here. We are not doing anything stupid. We are not trying to force the trade in the market. No, we're not going to do that. We are waiting. We are waiting. We are waiting, right? If you can't wait, you are not ready to be in this market, okay? This is a waiting game. It's a waiting game. It's a waiting game. This is the only place where inaction is rewarded, right? Inaction is rewarded for the most part. You don't get rewarded in the market for how much activity you do. The only place that inaction is a good thing. You gotta be patient with for A+ setup and everything. Yeah, it looks like we are going. It's gonna go to our intended take profit. You know. Yeah, somebody might look at this and be like, hey, if we had stayed and did not move our stop loss along, we'll still be in this trade. But on the other side, I don't think that is an effective risk management, right? If the market breaks and it's in profit, it breaks past your entry and it's in profit supported by a lot of support and resistance, is a wise thing to move your trade. That's just me. I think trade management is important. It makes no sense for you to be in profit and to let the market come and not only take back your profit and take out your losses as well. And what you guys have to understand is that sometimes people, the way people see things, they just look at things when it goes against them. They're like, if I didn't do this, this would have happened. But at the same time, there are other times when you can do it, but it still goes against you. All right, so let's keep watching. Let's see what is happening. Hello, welcome. Let me know wherever you're watching from. Thank you for joining our live stream. We stream literally every day from 6 p.m. to 8 p.m. Like we trade the agent session. We're trading live trade. Look at that. Yeah, I think we have a strong bias to the downside and we are just waiting. But this is not an ideal market. This is more like a choppy market. Look at price is just like going up and down. But through it, we are patient. We are not doing anything hastily. We are waiting for the market to come to us. And that's exactly what we're doing. We are waiting. Trading is more of a waiting game, right? So This is the only place when you get rewarded for inactivity. You don't get rewarded for inactivity anywhere else. But in trading, that is what it is. For the most part, we gotta wait, we gotta sit and wait for the market to align with our strategy, right? We don't just do things impulsively. And we are waiting for the market to come to us. We are level, we trade based on certain levels, and if the market does not come to our level, we are not permitted to pulling the trigger. And that is what is happening right now. Look at this. I don't like what I'm saying. It seems like the price about to go up for some reason. And there is this idea, right? Whenever you're trading, we always try to look at correlated pairs, right? When pairs are correlated, among them, there is what they call the lagger. There is a leading pair among correlated pairs. So in our situation, we are trading the USDJPY, right? And that is correlated with GBP-JPY. So oftentimes, GBP-JPY is like the leader, right? So wherever they are trading, that is an indication of what price is likely to go. And for example, right now, USDJPY is trading like 70 points away from the open price, and GBP-JPY is trading 90 points away from the open price, but the gap is not as much. When the gap is not as much, it means like there is no clear sense of direction. In this situation now, the gap is not as much. So I'm thinking price will likely go back up, right? This seems like it's going to reverse from this level. That's just what I'm thinking based on my observation. But if GBP-JPY gave her like a gap where it was trading almost like maybe like 100 points and USDJPY is trading 40 points, that gap is a good sense of direction. Let's see. Yeah, everything can happen right now. Everything can happen. This can go up or it can go down. Interesting. Look at this rejection candle right there. That candle is very important. It seems like the buyers, they are losing steam, right? That candle is important. That candle could mean a couple of things. Is either price is rejecting that area and the buyers are rejecting it and sellers are taking over, or is a point of indecision. Let's see. Yeah, but I'm still convinced it's gonna go up. GBP-JPY is like 80 points away from the open price, and yep. Let me know what you think. What do you guys think? Do you trade? What do you think about what is going on? What do you think? What is going on? We got 30 minutes more to go. And let's see if the market is going to give us what we're looking for. 30 more minutes, guys. 30 more minutes. Yeah, it seems like price is going to reverse at that level. Look at that. Yeah, that seems like it's going to reverse. Couple of things. I thought it was going to grab this liquidity right here, but that is not the case. What is the market trying to do? Break out of this accumulation area and move down. Was this a manipulation? Yeah, a little bit complicated, complicated. What is likely to happen? It's like we are in an area of indecision. You see, there's a lot of resistance around this area, a lot of resistance. There's literally no clear sense of direction right now. And anything can happen in a price action as this. Anything can happen. Yeah, we already made some profit. You see, if you can see, we had our entry right there. We took some profit, and now we're waiting for the market to come to our right entry. We are levels trader, right? We trade levels. So when you see all the lines that is plotted, you see all this price point. Those are areas we expect price to come to all this level, and these are our ultimate entries. When the price comes to these levels, that is when we get into the trade, and those levels are like liquidity zones where price respect those levels. If we pay attention, we see if it happens today, if it doesn't happen, but it happens all the time. When price get to those levels, a certain reaction happens, and that is how we trade. We plot those levels and wait for the market to come. So anything that is happening right now, this is not our ideal setup. This is what is like. There's a lot of noise in this area. Within these zones, there's a lot of noise. But when the market comes to those plotted zones, we anticipate like a reaction to happen. Yeah, right now, we don't have to do anything. Anything can happen now. If you get into this trade, the market makers can take it up or down. And this is where a lot of manipulation, this is like literally the manipulation zone. But when price goes to those areas, that is when you can anticipate something, you know. And a couple of things that we use when we are trading. When you look at this line right here, this is like the opening price. A lot of traders don't understand that. The opening price is quite important, right? Every day price move, and the open price is like the anchor. Whenever you're looking by how much price has moved, it always is calculated by how much it has moved away from its open price. So we always pay attention to the open price. Right now, USDJPY is 4 pips away from the open price. 4 pips away from its open price, and that is bearish. But when it breaks past this line, it's going to become bullish, and it's going to become an uptrend. So that line is very important. That's the open price. When you understand the open price, and then you can gauge by how much more price has moved away from that, and that gives you an idea what is an optimum entry, you know, for a mean reversion, because price always respect levels. The algorithm is set up in a way where price respects certain pips level, like a different pips level when a certain reaction is anticipated to happen. And that's how we trade. And all these levels, these are certain movements away from the open price. So right here, we wait for price to come to this level. That's going to be our first entry. If the market does not respect that level, this is going to be, yeah, that is how we trade. Hopefully, in the subsequent days, we can see that unfold, right? Today, it might happen. Sometimes it doesn't happen. And the time we trade, we literally trade like 2 hours from 6 p.m. Eastern to 8 p.m. Eastern. Like that is like the first hour is like the pre-market Tokyo open, and 1 hour after the Tokyo market open. And we anticipate those things to happen like every day. So right now, we are waiting to see if the price is going to go there. If it doesn't go there, that'll be it for today. But if it goes there, you will see exactly if it gets to this level, we anticipate a reaction to happen. And it doesn't happen all the time, but it happens for the most part. It happens like 80% of the time. It's a very unique way of analyzing the market. It has nothing to do with price action, all those things. It's just about identifying certain price point where the algorithm is likely to give a correction. The algorithm moves in blocks. It moves in pip blocks, 5 pips blocks, 10 pip blocks, 20 pip blocks, 40 pips block. And when you move in those blocks, there's a certain reaction that happens. And that's exactly what we wait for when we are trading. Thank you guys for joining. And what are you guys watching from? Put in the chat, guys. Let me know where you guys are watching from. Look at that. The market is going closer to the open price. That's the open price. Closer to that line. When it breaks that line, it's going to change from being a sell to becoming a buy or an uptrend. That line is very, very important. Let's see what happens. We have 25 minutes more to go. Let's see what happens. That's literally what trading is all about, guys. Trading is more about a game of patience and waiting. Once you have something that works, the next thing is for you to be patient and wait for that to play out in the market. We don't do anything impulsive. We literally come and just sit and wait. And wait. If you can't wait, you can't trade. Mohammed, thank you for tuning in. Mohammed, where are you watching from? Hope I pronounced your name correctly, Mohammed. Why are you watching from, Mohammed? And how long have you been trading, Mohammed? Yes, guys, I trade every day. I trade every day live, like literally live every day from 6 p.m. Eastern to 8 p.m. Eastern. Oh, watching from Malaysia. Thank you for joining in, Mohammed. Yeah, you can join me every day. I trade every day from 6 p.m. Eastern to 8 p.m. Eastern. So primarily I trade like the Tokyo Open, right? That's what I trade. I like to trade the opens. That is when the banks do trade. In those sessions, like a lot of things are predictable. But they're predictable when the banks are trading because they are the one who establishes stability in the market, right? And whenever they are, things become a lot more predictable. That is what I learned over the years. And that is why I choose that time to be the best time to trade. All right, Mohammed, are you trading? Are you new into trading, or have you been trading for a minute now? What is happening? Everything seems to be quiet in the market. Let's see. Let's see what is going on. Yeah, we are waiting, guys. There is nothing, the opportunity. We're waiting for the opportunity. We're not doing anything stupid, waiting for the market to come to us. But it seems like it's not going to happen today. And it's just one of those things, right? Some days you come, you wait for it to come, it doesn't happen. And it is always better to lose a day rather than trying to force a trade, right? And do something stupid. It's always better to stick to your edge. When you come, you have a plan, you have something you're anticipating from the market. And if it doesn't happen, you don't do anything for that day. That is a win. The win is sticking to your plan, right? Even the opportunity comes or it doesn't come, you stick to your plan. And that is considered a win. And it seems like that's what we're gonna do today. We have 21 minutes to go. Will the market go to our levels? And if it doesn't go to our level, we just gonna call it a quit for today. All right, Mohammed, that's wonderful. That's wonderful. That's wonderful. Yeah, I like your analysis. So yeah, join me every day. We'll be looking into some deeper things, and you will see me calling trade live, and you see the way I analyze the market. I guarantee you, there's so much you're gonna learn. It's a little bit different. The way we see and analyze the market, it's a little bit uncommon. Yeah, they just stick around, and I think this is gonna be a value added to your trading journey. Okay. Yep, let's look, let's see if any other thing is gonna happen. We are waiting. The market has gone back closer to its open price. Closer, this is the open price. The market is trading closer to its open price. It's not willing to break past this. It's not willing. Overall, we've have a strong sell or bearish tendency. From the moment the market opened, it has been trading below its open price, which is the previous day close. That is a strong overall bearish sense, right? And it's not willing to go past that line. If it goes past that line, it becomes an uptrend, but the market is not willing to go past that. That means something. That means something. It seems like the whole session is going to have a strong bearish movement, you know? Yeah, that's pretty much what it is. If you anticipate any trade now, going for a short will be ideal. The market has a strong short bias at the moment, you know? We are not doing anything now, but where the market is, if somebody wants to scalp, that there could be an entry, there could be a possibility for an entry right there, because price has gone close to that open price and it's not willing to go past that price. So there could be an opportunity for a scalping right there, and the stop loss could be somewhere right there, like a 3-piece stop loss, and you could target to go all the way down. But that will not be an ideal setup for us. So we're not gonna do it. I'm not gonna do it. But that, if you get in there, that will be a good trade. The market is not willing to pass this level. You see all the rejection candle. You see the doji bar that was created, and look on your left. And another thing, sometimes when you want to, you always look on your left and see what has happened before, right? Look right here. The market came to this area. There was a strong rejection as soon as the market opened. It rejected from going up. So this area is a strong area, right? If you get in now for a sell, it won't be a bad idea. But I'm not getting into it. Oh, Mohammed, for now I just go live on YouTube, but I'm gonna consider getting into TikTok. You know, I'll definitely consider that. Thanks for asking. And also please like and subscribe so we can grow this channel. Just like and subscribe. Yeah, I'll definitely consider YouTube. Look at what I said, guys. Yeah, that was a good entry. That was a good entry, but I didn't get into it, but I could see it. I could see it, but I'm just sticking this. I'm staying disciplined to my plan, right? But I could see that. That was a good entry. Look, the market rejected right here. It has a strong shield. This shield right here is a protection. This shield right here is a protection. If the market go past that, that'll be fine. It takes you out, and that'll be fine. But right now, it's a good trade. Even now, it's not still late to get into this trade, but I will not get into it. Yep. That is what it is, guys. It is what it is. We analyze the market daily and we call out trades daily and for free. I'll call things, and I mean, it's up by your discretion. It's no financial advice, but you can decide what you want to do with it. But that's exactly what happens. Like, this is a good trade. This is literally a good trade. The risk reward here is massive. The risk reward here, you can even target a 1:3, you know? And that is another thing, right? For a trade to be a good trade does not mean it's going to work all the time. What makes a trade to be good? You look for the probability of the trade going in your direction. The second thing, you look for the risk reward. In this trade, it's a good trade for a couple of reasons. It is protected by structure, and this is strong area of rejection right here. And also, your stop loss is only 3.7 pips, and your profit target, it could be huge, right? So even if it's a loss, it's a good trade. That's what defines a good trade. Risk, reward, and probability. A good trade is not if it's just a winner. A good trade is having those elements, right? So this trade, even if it's a loss, is a good trade. But I didn't take it because it's just not how I trade, and I have to stay disciplined to my plan. Let's see how it plays out. Let's see how it plays out. Even if it goes against, it doesn't go down, but it's a good trade. I think so. The risk reward is there. The structure is there. Yep. Look, the market is still resisting. It's still resisting from going past this line. You look at that. Do you guys see that? You see the rejection? That is a strong rejection. It came closer to this line and it dropped. The same thing happened right here. When it got closer to the line, it dropped. So that tells you a lot. The price is not willing to go past that open price. It tells a lot already. Yeah. This is a good trade. Regardless of the outcome, guys, regardless of the outcome, this is a good trade. Like I said, it's defined. It has a good structure backing the trade, and there is a good risk reward. That's all that matters. If it's a loss, it's fine. You took a chance, but the upside was higher than the downside, and that is trading. Look, it could go back and take our stop loss, but it's okay. But look at that. Look at those lines. That's what I'm telling you, those key levels. The market reacts along those lines. And that is how we trade. We look for those lines, and that is around those lines. That is how we define our entries and stuff like that. Yup. All right. It seems like it's going to take us out. But I didn't get in the trade. I told you guys that I was just calling it out, but it's not my ideal trade. I didn't get into that trade. But it's still resisting that line. It's still resisting it. Isn't that wonderful? That is amazing, guys. Look at that. It's still resisting. That is amazing. That is amazing. The open price is super, super, super important. If there's something you got to learn today, just learn about that open price. Look at the rejection. There is fighting. It's not an easy sailing, right? When it gets to that open price, it's like there is a fight. There is a fight around there. What do you think, Mohammed? What do you think? Look at that. Look at that. What do you think? Look at that. That is impressive. That is impressive. That is impressive. Yep. This line is super important, guys. The open price, so important. Make no mistake about it. The market is not willing to go past that line. You know? And if it's not willing to pass that line, it seems like the whole Asian session is going to be a downtrend. The whole Asian session is definitely probably going to be a downtrend. We got 11 minutes to go. 11 minutes to go. Let's see what happens. Let's see what happens. Price is still not willing to go past the open price. That is interesting. How many people do you hear talk about the open price? The open price is super important. Super, super important. Exactly, Mohammed. Price is trying to make structure. That's exactly correct, Mohammed. You're right on point. You're right on point. And price is respecting the opening price as well. You see, the opening price is not willing to go past that open price. And that is a good observation, Mohammed. Please make sure you subscribe. Let's grow this subscriber. Oh, you're currently checking another pair. What pair are you checking, Mohammed? Let me take a look. What pair are you checking? We got 10 minutes more to go. 10 minutes more to go. 10 minutes more to go. Don't panic. If you got into this trade, don't panic. I did not get into it. It's not what I'm looking for, but I see the opportunity. I see the opportunity. I see it. What pair are you checking, Mohammed? Yeah, it seems like it's gonna go down. It's gonna go down. There is no panic. There is nothing about it. Price resisted from going past its open price. The same thing happened as soon as the market opened, right? It rejected this area. This area was created during the New York close. That is a strong area. It seems like the market is not willing to go past that area. Look at that. Look at that. When it came and it faked out people, right? When it came here and he got in the trade, it faked people out. It almost felt like it was going to go, but it didn't. Euro. Okay, you're looking for Euro Australian dollars. Let me take a look. Let me see what's going on with Euro. All right, Mohammed, I'm going to checking Euro Australian dollar. Let me look at this open price. This was the open price. I'm checking this for you, Mohammed. Let's see. That was the open price. So this is the session low. That is a session low. Let me see by how much pips price has moved. You see, even Euro was respecting the open price. Look at the open price. Look at what is happening. Yeah, it wouldn't be a bad idea to go for a long. Go for a long here, and your stop loss should be around somewhere below this. It wouldn't be a bad idea for Euro odd. I think there's a strong bias for price to go up. Again, this is not financial advice. So if it was me, if I have to trade Euro, that could be an entry. It's not late, and your stop loss could be right below this low. If I had to trade, that's how I approach it. And take profit. Can be somewhere 1:2. Yeah. So Mohammed, if I'm approaching Euro USD, Euro Australian dollars, that's probably how we approach it. But that's not financial advice. You make your decision. Let's go back to USDJPY. My connection is a little bit slow right now. What is going on? I'm having a poor connection, guys. I'm having a bad connection. So look at what happened. Yeah, Euro JPY did exactly as where we call it out. We call it out right there at the open. And look at price just giving to us what we call it out. All right, Mohammed, it's my pleasure, man. Thank you as well for joining my live stream. You can tell we just started streaming, but thanks for joining, and please subscribe. And again, join me back tomorrow. I'll be here by 6 p.m. Eastern and 8 p.m. Eastern now. US time, US Eastern US time. So I'm trading every day, and I'll be glad to see you again. Yeah, that's what it is. Look at what is happening. The market is doing as we said, respecting those levels, going back down. And in 3 minutes we'll be done trading. 3 minutes will be done. In 3 minutes will be done. Just in 3 minutes. Yeah, it's a good day. It's good fun calling things out and seeing things been unfolding. That is it for the people that got in. Kudos for you. This is a good trade. It was a good trade, but I just couldn't take it because I'm disciplined. And that's what trading is all about, right? You can't have everything. You can't trade everything. You gotta be disciplined and know what your edge is and stick to it. Every now and then you can step a little bit out of your edge, but it's always advisable to stick to it. And that's exactly what I'm doing. Look at that. Everything looks good. It looks like we're going down. If you got into this trade, this is a good time to get break even. Break even. At this point, it's a break even trade. Risk free. Risk free at this point. All right, guys, in the next 1 minute, we'll be done. We'll be done for today. Remember, we'll be back tomorrow, 6 p.m. Eastern US Standard Time, and to 8 p.m. we trade Tokyo pre-market and 1 hour after Tokyo Open. That is what we trade. We like to trade with the banks. That is what we do. Look at this. Everything is happening beautifully. Beautifully. Take profit. Take your money, guys. Take your money. We just call that out. It's happening. Take your money. Take your money. Look at that. Look at that. Look at that. Isn't that beautiful? Isn't that beautiful? Did you guys catch that? That's beautiful. So, that's beautiful. That's beautiful. Seems like the market is about to give us our next opportunity. Let's plot our next levels. That is beautiful. That was a clean trade. Clean trade. That was a clean trade, guys. Well, it seems like the market is about to come to our next level. And let's wait and see. We're almost about to close the day. But it looks like all right, guys. That'll be it for today. Thank you all for watching and see you guys tomorrow, same time.